If you are new here, please don't forget to like and subscribe to this channel. Let's dive into today's topic. Throughout history, gold and silver have been esteemed as precious metals that were sought after by ancient societies. Even today, these metals remain a popular investment choice for astute investors, but deciding which precious metal is ideal for investment purposes can be challenging. Moreover, these metals have a reputation for being highly volatile, so understanding the reasons behind this is crucial. If you're considering investing in precious metals like gold, silver, or platinum, there are numerous ways to purchase them, and many compelling reasons why you should embark on this treasure hunt. Whether you're new to the world of precious metals or looking to expand your investment portfolio, keep reading to discover more about their workings and how you can invest in them. What are the key takeaways? Investing in precious metals is a great way for investors to diversify their portfolios and can serve as a protection against inflation. Although gold is the most popular precious metal investment, there are other options available for investors. Silver, platinum, and palladium are all considered commodities that can be incorporated into a precious metals portfolio, with each carrying its own unique risks and rewards. Several factors contribute to the volatility of these investments, including supply and demand dynamics, as well as geopolitical issues. In addition to owning physical precious metals, investors can gain exposure through various investment vehicles such as derivatives, metal ETFs, and mutual funds, and stocks of mining companies. Let's begin with the most prominent precious metal, which is gold. It is renowned for its exceptional characteristics such as its resistance to rust and corrosion, ability to conduct heat and electricity, and flexibility. While it has some industrial uses in dentistry and electronics, it is primarily used in jewelry and serves as a type of currency. Its market value is determined 24/7. Gold prices are primarily influenced by the market sentiment rather than the laws of supply and demand. This is due to the fact that the amount of gold stored above ground far surpasses the new mine production. In simple terms, when hoarders want to sell, the price falls, and when they are interested in buying, the new supply is rapidly absorbed, and the prices surge. Several factors account for an increased desire to hoard the shiny yellow metal. Gold is often seen as a safe haven asset when there are concerns about the stability of banks or currencies, or when political stability is in doubt. In times when returns on stocks, bonds, or real estate are negative due to inflation, people often turn to gold as an investment that can hold its value. When there are conflicts or political crises, people tend to hoard gold as a portable store of wealth that can be traded for essential goods and services like food, shelter, or safe passage. The United States has the world's largest reserves of gold, amounting to 8,867.72 tons as of February 2021. Let us take a look on silver. In contrast to gold, silver's price is subject to swings between its perceived value as a store of value and its industrial use. As a result, the silver market experiences greater price volatility than the gold market. However, while silver is often hoarded like gold, its price is also strongly influenced by the industrial supply-demand equation. This equation has historically been affected by innovations, such as the decline of silver-based photographic film in the photography industry due to the advent of digital cameras. On the other hand, the emergence of a large middle class in developing countries has led to a surge in demand for silver in electrical appliances, medical products, and other industrial items that require silver inputs. Additionally, silver is used in batteries, superconductor applications, and microcircuit markets. It's unclear whether, or to what extent, these developments will affect overall non-investment demand for silver. One fact remains: silver's price is affected by its applications and is not just used in the fashion world or as a store of value. The third one to consider investing in is platinum. Platinum, like gold and silver, is traded globally in commodities markets around the clock. During periods of market and political stability, platinum often commands a higher price per troy ounce than gold due to its rarity. The annual production of platinum is far less than that of gold or silver. The price of platinum is determined by several factors, such as its use as an industrial metal. The majority of demand for platinum comes from automotive catalysts, followed by jewelry, petroleum, chemical refining catalysts, and the computer industry. Geopolitical conditions in the countries where mining takes place and the supply and demand equation also have a significant impact on platinum prices. Auto sales and production numbers are major determinants of platinum prices, as auto catalysts account for a third of demand. The COVID-19 pandemic led to a drop in vehicle production and curtailed demand for auto catalysts, resulting in a decrease in platinum prices. However, demand increased by 21% during the first quarter of 2021, driven mainly by the automotive industry. The concentration of platinum mines in only 2 countries, South Africa and Russia, also creates the potential for cartel-like actions that could support or artificially raise platinum prices. The rise in no-emission vehicles could also put pressure on platinum prices. Investors should consider that all of these factors serve to make platinum the most volatile of all precious metals. Lastly, I would like to take a look at palladium. It is a lesser-known metal than the aforementioned 3, is a valuable metal in many industries due to its various applications. This shiny, silvery metal is commonly used in electronics and industrial manufacturing processes. In addition, it is also utilized in dentistry, medicine, jewelry, chemical applications, and groundwater treatment. The majority of the world's supply of this rare metal, which has an atomic number of 46, comes from mines located in various countries including the United States, Russia, South Africa, Zimbabwe, Canada, Australia, and Finland. Jewelers began incorporating palladium into jewelry in 1939. By mixing it with yellow gold, the alloy forms a metal stronger than white gold. In 1967, the government of Tonga introduced palladium coins for circulation that commemorated the coronation of King Tofurahau Tepu IV, marking the first recorded instance of palladium used in coinage. Metalworkers can create thin sheets of palladium as thin as 1/250,000th of an inch. Pure palladium is malleable, but it becomes stronger and harder once worked on at room temperature. These sheets are used in applications such as solar energy and fuel cells. Palladium is most notably used as a catalyst in catalytic converters, where it speeds up chemical reactions. This metal is also 12.6% harder than platinum, making it more durable. So how do you fill up your treasure chest? Let's take a look at the options available to those who want to invest in precious metals. Commodity exchange-traded funds, ETFs. Exchange-traded funds are a convenient and liquid means of purchasing and selling gold, silver, palladium, or platinum. Investing in ETFs, though, doesn't give you access to the physical commodity, so you don't have a claim on the metal in the fund. You will not get the actual delivery of a gold bar or silver coin. Common stocks and mutual funds, shares of precious metals miners are leveraged to price movements in the precious metals. Unless you're aware of how mining stocks are valued, it may be wiser to stick to funds with managers with solid performance records. Futures and options. The futures and options markets offer liquidity and leverage to investors who want to make big bets on metals. The greatest potential profits and losses can be had with derivative products. Bullion, coins and bars are strictly for those who have a place to put them, like a safe deposit box or safe. Certainly, for those who are expecting the worst, bullion is the only option, but for investors with a time horizon, bullion is illiquid and downright bothersome to hold. Certificates. Certificates offer investors all the benefits of physical gold ownership without the hassle of transportation and storage. That said, if you're looking for insurance in a real disaster, certificates are just paper. Don't expect anyone to take them in exchange for anything of value. Are precious metals a good investment for you? Precious metals offer unique inflationary protection. They have intrinsic value, carry no credit risk, and cannot be inflated. That means you can't print more of them. They also offer genuine upheaval insurance against financial or political or military upheavals. From an investment theory standpoint, precious metals also provide a low or negative correlation to other asset classes like stocks and bonds. This means a small percentage of precious metals in a portfolio will reduce both volatility and risk. What are the risks of precious metals? All investments have inherent risks, and investing in precious metals is no exception. While they do offer some level of stability, there are factors that can cause prices to decline, such as supply and demand imbalances, geopolitical tensions, or technical factors leading to more sellers than buyers. However, during times of economic instability, the opposite is true, and prices tend to rise, which benefits those who sell at that time. What are the benefits of investing in precious metals over stocks? When it comes to investment options, precious metals offer several advantages over stocks. These include acting as a hedge against inflation, possessing intrinsic value, having no credit risk, being highly liquid, adding diversification to a portfolio, and being easy to purchase. What are the best ways to invest in precious metals? The best way to invest in precious metals is either to buy the metal outright and hold the physical form, or to purchase ETFs that have significant exposure to precious metals or companies involved in the precious metals business. What is a disadvantage of investing in precious metals? Precious metals have no cash flow, so an individual will receive no income. If an individual holds the outright metal, there is also a storage cost associated with the investment. In conclusion, to diversify a portfolio, precious metals offer an effective option. However, it is essential to determine your objectives and risk tolerance before investing. While the volatility of precious metals can be beneficial for building wealth, it can also result in significant losses if not monitored carefully. Don't forget to like and subscribe to this channel. What do you think about precious metals? Let us know what you think about it in the comments.